With the property market going absolutely crazy, there are a lot of first home buyers and investors entering the market for the first time. Some of you guys just want a place to call home, but most of you guys don't mind making a bit of money along the way. Having gotten into the market in my early 20s and being in the market for almost 10 years, I can confidently tell you that you will make a lot of mistakes along the way. But if you get the fundamentals right and you make good investment decisions, you are going to make a lot of money over the next 10, 20 and 30 years. And I personally think property investing is one of the best and most stable and safe investment vehicles to put your money into. My real estate investments have done extremely well for me. And if I didn't get into the property market at an early age, I would not be where I am today and be able to enjoy all the freedom that I have. There are so many different ways to make money in the property market under any market conditions. And in today's video, I'm going to share with you some of the different strategies that I have personally used to make some life-changing money in the property market. Look guys, you know I'm very transparent with you guys, and please understand that I'm not making this video to brag or show off in any way. I am simply sharing with you guys the strategies that I have learned and the knowledge that I have accumulated over the years. Please also understand that this is not financial advice and I am not a financial advisor. I am simply some guy you found on the internet, and the internet can be a very dangerous place. You will never know who's on the other side of that screen. So make sure you do your own research before investing hundreds or thousands of dollars into an investment property. Alright guys, let's get straight into the video and start with the first strategy, the most common strategy that most people use to make money in the property market. And that of course is to buy a property and hold it over a long period of time. If we look back at history over the last 30 years, 50 years or even 100 years, we can see that property prices in Australia and around the world has only gone in a single direction, and that's straight up. Sure, we have definitely seen some fluctuations along the way with some minor corrections like what we saw back in 2008 and back in 2020 with our borders shut, and that is completely normal. Because if we zoom out and look at the bigger picture, the trend is a very strong upward trend. One of the main reasons why I think Australian property is going to continue to do well is not because I expect people to keep paying ridiculous prices for properties, or that I expect the market to keep growing at unsustainable levels. It is actually because of the level of inflation that we are currently witnessing in our local economy as well as the global economy. A lot of you guys might be asking, what does inflation have to do with the property market and property prices? Well, let me tell you now, I think inflation has everything to do with property prices. Allow me to explain. First of all, inflation will increase the cost of everything, the goods and services we need to sustain our quality of life, such as housing, food, medical services, and our enjoyment. The thing with inflation is that it increases the price of goods and services very slowly. It is so slow that we can barely notice it unless we are paying attention to it. However, over the last few years, inflation has become much more noticeable, with the price of our goods and services increasing significantly as our government and the governments around the world continue to print more and more money. And people are starting to understand that leaving money in the bank is no longer an investment strategy, because the 1 or 2% the banks are offering you on your deposits is really not even keeping up with inflation. So you are actually losing money by leaving money at the bank. And people are starting to understand that, and they are now investing their money into other assets, especially real estate. Inflation is not a transitory thing, it is here to stay, because our entire monetary system and economy depends on it. They depend on the 2 to 3% GDP growth that our governments aim for, and without it, our entire system will collapse. Over the long term, real estate has been a great investment hedge, and people are starting to understand that now, and a lot of people are putting their money into real estate as a protection against the rising inflation, especially those who don't have the risk appetite for the stock market or cryptocurrency markets. Therefore, a lot of people are completely happy putting most of their money into the home they're living or into an investment property, because as history has taught us, investments like this have done extremely well over the long term. And that's what a majority of Australians are doing, especially with our obsession with property. A lot of investors and first-home buyers are simply buying a home, putting most of the money into it and expecting it to protect them against the rising inflation. And to be completely honest with you, if you buy the right property in the right location, it is very hard for you to go wrong in 20, 30 or 40 years time. I think the strategy of simply having some exposure in the property market is very important, because if you don't, it's becoming harder and harder to get into the market, and with rising prices, you could soon find yourself completely priced out. So that's why I think it is absolutely crucial for those who are thinking about getting into the property market to at least have some exposure, whether through an investment property or a home of their own. And if we look back over the last 10 to 20 years, this strategy has been used by a lot of people, and they're spending millions of dollars buying into the most expensive markets of Melbourne and Sydney, and they have done extremely well. While the strategy of buying into the biggest markets of Australia has been very effective over the last 10 to 20 years, times have changed quite a bit, and this might no longer be the most effective strategy, at least in my personal opinion. The second strategy that I'm about to share with you is a strategy that I personally use, and this is how I got a start in the property market back when I was 22. This strategy is called rent vesting. I know I have talked about this strategy before on this channel, so I won't go into too much detail about it. I'll just briefly go over it for those that are new here. The dilemma I had when I first got into the property market was that while I wanted something in Melbourne, in the city where I lived, I did not want to carry $1 million mortgage. The repayments on that mortgage would have been huge, and the rental income from renting out the property would have been very small, definitely not enough to cover the mortgage, meaning I'll have to contribute thousands of dollars a month just to feed the mortgage. So instead of buying $1 million house in Melbourne, I decided to look interstate and find something that has positive cash flow as well as good potential for growth. The only real sacrifice that I had to make was that instead of buying my dream home right away and becoming a proud homeowner, I will instead have to rent a place to live for the foreseeable future. This is a very big issue, especially in the Asian culture. When you are renting a place, you are seen as unsuccessful and unable to buy a place of your own and become your homeowner. So renting is seen as a very bad thing, which I do not agree with. To be completely honest, I have zero issues with renting because I know what my long-term goal is, and I know I'm making this sacrifice so that I can retire young. And I honestly have no idea how couples, especially young couples, are coming up with $1 million to buy $1 million property. This rent vesting strategy built the foundations for my entire property portfolio. Because I purchased my first 2 properties in Hobart, that really set me up for my next purchases. The equity gain as well as strong cash flow were the building blocks to my entire portfolio, and it allowed me to purchase 2 more properties in Launceston a year later, and then 2 more properties in Bendigo, and then 2 more properties in Perth. Look, I'm not here to tell you that positive cash flow is the best and that everyone should do it, because there are definitely pros and cons for both positive cash flow as well as negative gearing. For example, the cash flow strategy can be very risky if you don't know what you're doing and you end up buying a property in a mining town, or if you end up buying an apartment in an oversupply market. However, a negatively geared property in a blue chip location can also be very risky if you are over leveraging yourself and you are not taking into account the fact that interest rates will start rising in the next few years. From what's happening in the market right now and from what I can see, there are a lot of first home buyers and first time investors who are at serious risk of defaulting on their massive mortgages if they were to suddenly lose their jobs, or if the interest rates were to suddenly increase to combat inflation. Again, I'm not trying to tell you that one strategy is better than the other, but I personally prefer the cash flow strategy because it is better suited for my personal circumstances and my short-term and long-term goals. We have just talked about the 2 strategies that most people use to build wealth over the long term. We can either buy a negatively geared property in a blue chip location, or we can look interstate and find something that's cash flow positive with good potential for growth. Let's now talk about a strategy that we can use to make money in the short term. And this is one of my personal favorites, and it is of course flipping houses or doing small developments. This strategy is much more risky if you don't have any experience in the building industry, so make sure you talk to someone with a lot of experience and someone that you can get advice from before doing your first flip. And you should definitely get familiar with the process of flipping a property first before doing your first development or subdivision, because trust me, it is a lot of work and quite stressful. This is how I personally got started, by renovating and flipping a property quickly and learning how to deal with the builders, the council and other contractors. I personally think flipping properties is one of those very satisfying and fulfilling processes because you get to turn an old rundown property into something modern and desirable. You are literally building someone's dream home for them, and this is very satisfying. Another thing that I really like about flipping properties is that it adds an additional income stream and something that we can do on the side on top of our day job. I personally aim to do one profitable flip a year, and if I'm consistent with this, I can simply show the bank my income, and this will be additional income stream for me, and this will allow me to borrow more money and buy even more properties. Obviously, flipping a property is not as easy as it sounds. You can't simply buy any property under any market conditions, renovate it, and expect to make a huge profit. Under the current market conditions, I personally don't think it is the best time to be doing a flip, because house prices are rising so quickly and there's so much competition, it is almost hard, almost impossible to find a good deal. And that is the most important thing, finding a good deal for under market value and then adding value to that property and selling it for a big profit. Look, everybody approaches property flipping a bit differently. I personally prefer to buy my properties under calmer market conditions during a buyer's market. This allows me to negotiate a much better deal. For example, if you follow me on Instagram, then you will know that I'm currently doing a renovation and subdivision in the western suburbs of Melbourne. And this was a property I purchased back in 2029 when APRA stepped into the market to impose tough lending practices, which saw a significant correction in the Melbourne and Sydney markets. Because of the market condition back then, I was able to negotiate a great deal and purchase the property for $750,000. If I was to purchase the same property under the conditions we are in now, I'll be paying very close to $1 million, if not more. And as you can see, if I was to pay $1 million for a property, it will leave me with very little profit margin at the end of the day. In fact, I have purchased most of my properties in either the correction or recovery phase of a property cycle. And following this very simple yet effective strategy has made me a lot of money flipping houses. Again, this is not financial advice, it is only my personal strategy. And sometimes trying to time the markets can be quite hard. But one thing that I always remember, as Warren Buffett once said, be fearful when others are greedy and be greedy when others are fearful. And this is how we find great deals under calmer market conditions. Just think about it. If a seller's property has been sitting on the market for 3 months and you offer them 10 to 15% below market value, I think there's a decent chance that we might get it. However, in the current market conditions, with so much competition, if you try to offer someone 10% below market value for their property, what do you think is going to happen? It is very likely they will simply laugh at you. Out of the 3 strategies we just discussed, I personally use all 3 of them to create a strategy that is best suited for my needs. I have cash flow positive properties interstate generating strong cash flow as well as growth, and I use that money to buy properties here in Melbourne, which I then develop and then flip. There is no one-size-fits-all strategy when it comes to property investing. The strategy that you use to create wealth ultimately depends on your personal and financial circumstances. For those who don't have too much experience in the property market, finding a good quality investment grade asset in the right location is going to do very well for you. Just having that exposure there is going to create some very serious wealth over the next decades. There's no need to get too fancy with your strategy and try to become a developer right away. Ease into the process, learn more along the way, and you will grow as a property investor. Alright guys, this brings us to the end of the video. I hope you guys enjoyed it and learned something new. If you did, please do me a huge favor by hitting the like button right there and leaving your comments below. It really helps the channel a lot. I wish you guys the very best on your investment journey, and if you don't already, make sure you go follow me on Instagram where I post daily content. Have a lovely weekend. I'll speak to all of you guys in the next video.